Twitter is reporting earnings of $513 million US for the first quarter. This comes days after it agreed to be sold to billionaire Elon Musk. The social media company said Thursday that revenue rose 16% to $1.2 billion from January to March. This is compared with the same period last year. San Francisco-based Twitter reported an average of 229 million daily active users in the quarter. Mr. Musk's $44 billion deal to buy Twitter was announced earlier this week, and the deal is expected to close later this year. Twitter canceled the conference call with executives and industry analysts, which usually accompanies its results. So it is expected there will be little further insight into the company's current financial condition. But what do we know so far about how this deal might impact investors? Joining us now is Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, welcome back to Forum Daily.
Thank you, Nima.
So under this deal, we know shareholders are going to get $54.20 per share in cash, and Elon Musk is going to make Twitter private. But why take a publicly traded company and make it private in the first place?
Well, public markets have been under strain for some time in that there are restrictions and regulations involved in being a public company, but those are not normally insurmountable for something the size of Twitter. But often companies are taken private because there is the perception, at least, that more value can be derived for them as a private company. Companies have been slowly going private in a whole bunch of different ways. Many companies have been doing share buybacks, so they've been taken private by the death of 1,000 cuts. But this is a pretty spectacular example of a trend that's been in the background for some time, of public companies actually doing the reverse and being taken private. I think in this particular case, Elon Musk believes that he can do a better job and create a better platform as a private entity, and then I would expect at some point republic it, reissue it as a public company with this rebranded, retooled, reimagined format.
All right, Brendan. Well, it was last week when Elon Musk made the unsolicited bid to purchase Twitter, but the board of directors did something pretty interesting. They launched a so-called poison pill defense. So what exactly is a poison pill, and what's the purpose of it?
Well, it's the name is, of course, originally derived from the poison pill that prisoners might give themselves in order to prevent from being questioned, to make it harder to get information out of them. But in the case of a company, it makes it harder for the potential acquirer to take over the company, either by diluting the stock or giving the non-takeover shareholders special rights. There's a variety of forms that it takes, but it might not be a signal that the company doesn't want to be taken over, as is obviously the case with Twitter here, but it can be a negotiating tactic to make it more difficult and therefore perhaps get a higher price. So I think he was clearly being used in that latter sense last week.
All right, Brendan. Well, taking a step back from all of this, we know Elon Musk also owns Tesla, and Tesla shares actually lost almost $250 billion since April 4th. So do you think shareholders are worried?
Well, I kind of would be, because the world is very competitive. I mean, Tesla has become one of the biggest market capitalization companies in the whole world. I think it was in the top 10 before all this started. And still in the top 20 or 25. And it doesn't, sell as many cars or a fraction as many cars as GM or Chrysler or Toyota or any of these other companies. So you really have to value it as a technology company. And what we've seen is these big technology companies that were leading edge at one point, Netflix, Call Your Office, are now under pressure as other people are able to catch up with them. I mean, most car companies will have an electric car line at some point in the next 10 years. So Tesla won't be alone in that business any more than Netflix is alone in the streaming service business. So the technological advantage becomes commonplace. So I think if you're a Tesla shareholder, you're worried that your founder, chairman, visionary has now got too many irons in the fire and may take his eye off the ball that made him wealthy in the first place.
All right, just about 30 seconds left here, Brendan. But what are you keeping your eyes on as this deal progresses?
Well, it'd be interesting to see, because the bigger argument, of course, is what is the future of social media? Not something that I'm actually on in any way, except perhaps ancestry. So I'm all of my followers are they're dead. But the Twitter, Facebook, there's been a bit of a culture war around. There's been a significant culture war around that about what can be on Facebook, what can be on Twitter. I think they didn't kick the president of the United States off, or the past president of the United States. So I think the bigger issue will be, how will Elon Musk taking over Twitter change the face of how social media actually works? And I think that'll be something worth watching for years to come.
Definitely something to keep our eyes out for. Brendan, thank you again for joining us today.
Thank you, Nima.